All right. What's up, everyone? Icy Gains here. I hope you guys are excited for this one. It's going to be episode 6. And yes, it is the grand finale of the Greatest Stock Market for Beginners YouTube series. Today marks off a little chapter close. There's going to be a lot more episodes, a lot more videos down the road, but this is going to be the official cap to the beginner series. This is one of the greatest YouTube series that I've personally seen, and now it's me that's creating it, which is awesome. It's filled with the fundamentals and the strongest tools that you could have and learn, so that you could excel in your stock trading, stock investments, and just in your day-to-day knowledge about the stock market. So it's gonna be a good one. But before we get started, I do want to shout out the Icy Trades Discord channel. It is still free access, no price to pay. So if you're still asking yourself if you should join or not, I don't know why you're doing that, right? There's no reason not to join. All the members are having fun. They're having great profits. They're already learning. They're already charting on their own. They're creating their own charts and putting it on the chat. And we're all just like looking out for each other. We're locking in together, and that's just the best community you could ask for, right? When I just started off trading and in the stock market, it was very hard for me because I was on my own. I really didn't know who to listen to because I didn't know who was real, who was not, like who was trying to scam me, who was not, right? But I could tell you that the IC Trades Discord is the place you want to be to get yourself started and to grow in this industry. So, with that being said, let's get started. Oh, one more thing. The only thing that you have to do here is, like, comment, subscribe, all that good stuff. All right, let's get going. So, IC gains. What are we talking about today? Well, glad you asked. Today is going to be all about the EMAs and the SMA, aka exponential moving average and simple moving average. And I know that might sound a little complicated because those were long like acronyms, but it's very simple, very very simple. And how could I break it down? Well, let me try. So let's say that you're going up a scary hill and it's getting dark, and you have nobody nobody there, nobody's around you. There's no there's no guide basically, right? But here comes a, a nice friend that's like an expert in that climb, in that mountain. That expert, that buddy, is now going to tell you when it's safe to keep on climbing up, or when it's dangerous in the mountain, and it's going to tell you when to stop. Also, when you're going down the mountain, that buddy is going to tell you, keep going. You're good. You're good. It's not slippery. You're safe. You're good. Nothing to worry about. Just keep walking down. Right? You're gonna feel a lot better. You're gonna feel more confident. You're gonna feel, happy to keep on walking down that hill or walking up that hill. Right? Well, the EMA and the SMA serve as that buddy. They are that helper in your stock chart. But here's the biggest takeaway with this indicator. This indicator, EMA and SMA, are trend tools. And what do I mean by that? Well, have you ever seen a stock go from the top to the very bottom? That's a trend. That the trend there is called a downtrend. Have you ever seen a stock go from horizontal, and then that's when it goes up, and it goes up for probably weeks or months? That right there is a trend. Now that's an uptrend. So this tool is very very powerful because, like that buddy that tells you keep going up, you're safe, there's no crazy animals that are going to attack you. Well, this indicator is going to tell you in the stock chart, like, hey, this stock is going to continue up. Like, it's safe for you to keep thinking that the stock is going to keep going up. Or let's say it's going downhill and you're trying to ask yourself, how do I know if I'm safe to still think that this stock's gonna keep downtrending? Is it going to follow the trend? Well, let's see how we implement this tool. So it's very easy to add this indicator to your stock chart. So what you want to do, I already have my preset indicators here, but what you want to do is go here, and then I think you just have to type EMA. Yeah, so it's going to be called moving average exponential. So I think I just added it. Yeah, and it's right here. So you see, now this EMA is now going to show up in your stock chart, and you could see a little line, but I'm going to dive in on explaining how it works. All right. So I'm first going to start off with the SMA. The SMA stands for the simple moving average, and it is quite simple, and that's why it's called the SMA. The SMA is basically mathematically it's going to be the average price of the stock that you're looking at in the past number of candle closes, and the number of candle closes depends on the input slash length that you set that indicator to in the settings. So for me, and the most popular SMA is going to be the 200 SMA. And what does that mean? If it's a 200 SMA, that means that the indicator is going to show you the average price of the stock from the past 200 days, because I am in the daily time frame right now. So let's go ahead and turn the indicator on, and bam. Let me change the color for the purposes of this video so that you could see it more clearly. I'm gonna make this, let's make this, can I make it, or big blue? Oh yeah, there it is. Boom, it's right there. Let me make it, I'll make it white. I'll make it white. Okay. So now I have turned on the 200 SMA indicator. Bam, look at that. Now you have your first SMA indicator on your own stock chart now. And I'm using Trading View. So now what are we seeing here? This looks like a caterpillar or a snake, right? Well, no, not really. This is actually just the average price of Tesla from the past 200 days. And mathematically, the equation for this is very simple. Like, if you see the SMA here, right here, it's telling you that Tesla, the average price of Tesla the last 200 days was 330. So why is this so important? Why do people use the SMA? Well, the SMA, like the EMAs, we'll get to those in a little bit, but these indicators help you see quick supports and resistances. So because the last 200 days average price was 330, most likely than not, Tesla this SMA is going to act as a support, because that means that Tesla is reaching that average price in the last 200 days. Okay? So that right there is a great support area to pay attention to. And you can see that the reaction to the 200 SMA was a bounce off. It was a bullish signal, okay? But now let's see on the flip side. Let's go back to here. Let's go back to here. And this is the same it resembles these indicators resembles supports and resistance levels. If you look back at my previous episodes, we went over supports and resistances. Sometimes support levels become resistance levels. And what do I mean by that? Just to quickly summarize that episode, was that let's say you have a level up here and a level down here. When the stock keeps rejecting from the resistance level but then breaks above it, now that resistance level becomes the support level. Okay? Same with the SMA. If the stock breaks under the SMA, now it's going to act as a resistance level. So now you see here how, let's go back to May 2021. So Tesla here was hovering over the 200 SMA. And so most likely than not, it's going to use that as a support and launch to the upside. But when it comes back down to that SMA area, let's say right here or here, now it's going to think, is it going to support or is it going to break under and become resistance? Well, here it kind of supported because it did break down, but it quickly bounced off of the 200 SMA. But then it came back down, and you can see that the stock broke under the 200 SMA, and then this becomes resistance. Look what happened a couple weeks later. So it breaks under the 200 SMA, takes a couple of weeks to kind of come back up, but now look at what happens. The Tesla does not break above the 200 SMA anymore. Now, Tesla struggles much more to break to the upside, which now means that the 200 SMA has become the resistance. And what does that mean? Well, as a resistance level, it rejects it and goes back to the downside. All right. So now that we have a general idea of what the 200 SMA could, help us with, now let's go over the EMAs. And one more thing before we move on is that these indicators, or the SMA, is going to be, it's considered a lagging indicator, which means that since it's taking the average of the past 200 days or 100 days or 50 days, depending on the input that you set it up as in the settings, it's going to be a lagging indicator. It's only going to serve, it's going to serve you not for quick moves, because it's the information that the 200 SMA has, or the 50 SMA, is from the past 50 days. That information that you're seeing isn't going to tell you right away, oh, let me get in today because I think it's going to bounce off today. No, it's just giving you the general heads up of the general move in the next 5 days or 10 days if you're looking at the daily time frame. All right. So that was the SMA. Now, let's go to the EMA, the exponential moving average. And I like the EMA here because the way that the SMA is simple and it's a lagging indicator, the exponential moving average is going to, come into play and show off. And basically, since it's an exponential moving average, the math equation is more complicated. But this is where the EMA is like a superhero. Like, it's gonna be a super buddy. You're gonna notice that once I turn these indicators on, now these EMAs are going to hug tighter to the stock price day to day, or depending on whatever time frame you have. So why is the EMA follow the price more closely than the 200 SMA? Because you see here, the 200 SMA didn't even catch up to the price of Tesla, and that's the reason why we call it a lagging indicator. But for the EMAs, you're gonna notice that the EMAs are actually following the stock much more closer. And why? Well, because uh, it is not a lagging indicator. It is much more it's set up faster to follow the stock price. So let's go ahead and see what that means. It's going to give you guys um, a quicker support and resistance to the stock. And let's say that we only use one EMA here. Boom. So now we have the 50 EMA being used. We have the 50 EMA. The 50 EMA is going to be the exponential moving average from the last 50 days. Basically, the input that you see on the indicator is going to be the average of the last X amount of days, minutes, hours. Okay, so same way that we use the 200 SMA to help us decide where a support and resistance could be, the 50 EMA serves as the same purpose. But now you're gonna see how the EMA is hugging the stock price much better. Now that buddy is closer to you. And this is how awesome this EMA is. Do you see how Tesla drops, whenever Tesla drops to the 50 EMA, there's a bounce from here to there, right? And you can see a little closer here, but it didn't really touch the EMA. Same right here. Whenever a stock moves a little bit too fast, a little bit too drastic, is not the EMA or and the SMA. They're both going to struggle because they're because the input is still pretty large, and by the input I mean the length of that indicator. So let me go ahead and turn that off. Turn this off. Boom. All right. But wait. Are you able to add another EMA to get closer to that stock price? I'm glad you asked. Yes, you can. So not only do we have the 50 EMA, we already talked about the 200 SMA as well. Now let's turn on a 21 EMA. And what do I mean by a 21 EMA? Well, now this indicator is going to take into account the last 21 days and average the stock price from those 21 days. And what do you see? Now the EMA is hugging even tighter to the stock price. Now you have another buddy that's even closer to you, helping you out and telling you, hey, it's safe, the stock's gonna keep going up, or hey, the stock's gonna keep on going down. So now you see the stock touching closer to the 21 EMA, touching closer to the 21 EMA. You see here, there's a reaction. You see here, and there's another reaction. You see, uh, where else is the 50 EMA? Right here, right here, sure. It touches the 50 EMA and the 21 EMA. Boom, right? And I see. You told us that this serves as a buddy, and it's like a trend indicator. It's gonna help us ride the trend. Yes, it is because the way that it does that, the way that it helps you, is that it's going to give you that cushion to say, okay, if I am saying that the 200 SMA and the EMA serve as a support or resistance, whenever the stock price hits the EMA, that's where I'm going to either get calls or bet that it's going to break down. But in this example, let's say you got calls when the stock price reached close to the EMA, and you got calls. Now you could tell yourself, okay, since these are support EMAs, now I'm going to buy a call and hold on to this call for as long as it stays above the EMA. That would be the general idea and assistance that you get from the EMAs, because now you're able to create a story, have a confirmation, and be more confident in the play because you have that buddy that's telling you, hey, as long as I'm here, keep going up, you're okay. So in every point here, each day, the stock price was above the 21 EMA, 21 EMA. It was this whole time. Tesla remained above the 21 EMA all this whole time. So you could have held your call from 274 and kept it all the way up to 463 because the stock price remained above the 21 EMA. All right. Okay, awesome. So now that we have the 50 EMA and the 21 EMA, I see. Is there another way to have an EMA help me even more? I'm glad you asked. There is the 9 EMA. And look how tight this one sticks to the stock price, right? So now you could see why the longer the moving average indicator you have, that's the reason why it's further away from the stock price if it moves too quick, too drastic, is because of that long is because of the number of stock price that it's calculating, that it's putting into account, right? So why is this so powerful to have these three EMAs turned on? My favorite way of using the EMAs is from EMA compression is what I call it. I'm not sure if that's the actual name of the strategy, but that's what I pretty much called it. So there's EMA compression and then there's EMA crossover, okay? And they each follow each other. And I'm going to explain to you exactly what this means. But let's go ahead and go to a new chart. Let's go to Netflix. Netflix recently went through a crazy downslide, and I'm going to show you how you could have caught that. All right, so let me expand this as well. Awesome. All right, so this is going to be EMA compression. EMA compression is when your EMAs, the 9, the 21, and the 50, stay together and they're getting tight. That's what creates the EMA compression. Where do you see a compression here? If you caught it here, then that is perfect. EMA compression was perfectly in this time period. So from August 8th to October 20th, Netflix was under a EMA compression. Why is this important? Well, you could think of an EMA compression the same way of a consolidation phase of a stock price. And why is that important? Well, whenever there is a consolidation or a EMA compression, more likely than not, what follows a consolidation is a big move. It's like um, it's like a ticking time bomb. A ticking time bomb is gonna tick, 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 and let's say you don't know when it's gonna go off, right? But if it's taking so long, it's gonna blow up big time. That's exactly what this EMA compression does. The longer it takes to make a move, the bigger the move is gonna make once it's ready to make that move. So this EMA compression was going to lead to a big move. It, usually the EMAs do not compress for this long. So this was very abnormal. So what does Netflix do after this EMA compression? Well, I hope you've been watching the stock, but pretty much Netflix drops big time, and that was the big move. And that followed a big consolidation phase. The buyers and sellers of the stock didn't know what to do. People couldn't decide whether Netflix was a buy or if it was a sell. And it wasn't until earnings happened that they realized Netflix was a sell. And this is where the EMA crossover comes into play. So, the reason why the EMA crossover is so important, so helpful for your stock chart analysis is this. I'm going to compare it to a 4x1 track track race. So for all my track stars out there, I know you know what I mean. So usually in a 4x1 there's four runners and they each run 100 meters. They do one lap. I remember the first 4x1 that I ever saw was the Olympics, the Jamaican team with Usain Bolt. He was the anchor, the fourth runner. Every time the runners were getting the baton passed to them, they would blast off their like start. And it was crazy because their acceleration was so fast. And when it came down to Usain Bolt getting the baton from his partner, he just launched out of that start and beat everyone. He gapped everybody. It was pretty crazy. It was so cool. He was so fast. That same way where he gets a boost of acceleration when he gets the baton is the same boost stocks get when the EMAs cross over. Okay? Stock will gain a lot of momentum when the EMAs cross over. Alright? So, what do I mean by this? So, let's go ahead and dig in some more into Netflix. So, now that we went over EMA compression, which means the EMAs just were sticking pretty close to each other, what follows is an EMA crossover, right? Because there was a move. And what do I mean by this? This EMA crossover happens directly right away after the EMA compression. So you can see here how this crossover happened as soon as Netflix stock price plummeted. It gapped down, and there was a EMA crossover between. You can see that the 9 EMA is the orange one, 21 is a green one, and red is the 50. So remember, the longer the EMA, the more of the support that it serves. So because the 21 and the 9 EMA crossed underneath the 50 EMA, that is a bearish signal. That is a bearish signal. Whenever the lower time frame, whenever the lower time frame EMAs cross under the 50 EMA, which is the support, that's going to be a bearish signal. So now that we know that this bearish signal occurred, now we want to know what our good entry would be for a put situation. Remember, since we're using the higher time frame EMAs as the support, we could wait until we see if the stock is going to break back up to the upside or reject. And since we stayed patient here, right, we don't really get any type of advantage from getting into a position because the EMAs are gapped above the stock price. We wait, and now that you see it getting closer here, now this is where you ask yourself, okay, is Netflix going to reject the EMAs or break out, right? Because Netflix could have done the same EMA crossover where the 9 EMA will cross the 21, and then those two EMAs, the lower time frame EMAs, will cross over above the 50 EMA. That right there would have been bullish. But what do you notice? Netflix rejects the 50 EMA. It rejects the higher EMA. So now you could say, okay, sweet. That means that this support EMA now has become resistance. Now that the support EMA becomes resistance, I'm going to use it as a put idea, a put play entry for me to buy puts or think that the stock's gonna go down. From there, now you could draw your thesis or draw your play out that okay, this is gonna reject and this is gonna drop. You would have bought your puts here. You would buy your puts at the 50 EMA because you're saying that's gonna reject and keep going down, and you're gonna tell yourself, I'm going to buy a put and hold for as long as the stock price remains under that 50 EMA. Or if you want to protect yourself even more and give yourself less cushion of losing profits, then you're gonna tell yourself, if Netflix does drop underneath the 50 EMA and then the 21, now I'm only gonna use the 21 EMA as my cushion. As long as the stock price remains under the 21 EMA, I'm going to hold on to my put. It all depends on your risk tolerance, right? Uh, if if you use the 9 EMA to your your risk tolerance, you're giving yourself even a tighter space of telling yourself, I'm gonna hold this put for as long as it remains under that 9 EMA. Because why? Because now you're only giving yourself, a little room for the stock price to break either above or underneath that EMA, that support or resistance level. You see how the 9 EMA is hugging tighter to the stock price way more than the 21 EMA. And then the gap between the 21 and the 50 is even greater. So let's see if there was another example. Okay, boom, right here. This is a perfect EMA crossover actually, right? Here, a bullish EMA crossover is when the 21 and the 9 EMA crosses above the 50 EMA. That right there is a bullish EMA crossover. And since the EMA crossover occurred here, let's say you bought calls anywhere in this area. Now you could tell yourself, I'm going to hold on to this call for as long as the stock price remains above the 9 EMA or above the 21 EMA or above the 50 EMA, right? It all just depends on your risk tolerance. If you're going to use the 50 EMA as your guide to keep on holding the call, the play, you're giving yourself a lot of space to keep holding that call, to keep riding the wave, the trend. This is why the EMAs and the SMA is their trend indicators. They are strong tools to to have because it helps you see if the stock is following the trend. Because here, once Netflix went all the way up, right? You can see how it was trying to reject or break underneath the 21 here, but it didn't. It closed in between the EMAs. That right there would have been your first, maybe like your first hiccup of the stock. Right there would be your first caution time, like, okay, like, is it losing strength? But then you're like, okay, no, it's still right close to the 21 and 9 EMA. That's good, that's good. We are safe to keep on believing it's going to continue up. But then, see here, this is when the status changes, right? It goes from very high above the 9 EMA to now getting closer to the 21. And here you see a little bit compression. And now that we're getting closer to the 50 EMA, that was the support. We're getting too close. Now I'm going to switch my bias and think this is done. Like the momentum has been lost. And now let's see what the next direction is going to be. And the next direction led to a consolidation phase, aka EMA compression, and then it chose the next direction, which is the EMA compression, and then down to the downside. And that right there was a strong reversal, is what you call it, from the top to the bottom. And here's another thing. The EMAs crossed underneath the 200 SMA. And remember, the 200 SMA was the strong support level. So that you could have used that to your advantage as well, because not that it rejected the 50 EMA, but then also crossed over, or sorry, it crossed underneath the 200 SMA. That's extremely bearish. Now you could tell yourself, wow, this is gaining a lot of momentum. It rejected the 200 SMA, the 50 EMA, and now I'm going to ride the wave down. And that is exactly what happened. So icy gains. Could I use this for day trading for like the 5 minute? Yes, of course. So if you're looking at the 5 minute, you wouldn't really use the 200 SMA, right? So I'm gonna go ahead and turn that off. And this is gonna be a quick example. I don't want to make the episode too long, but I just love this tool. Look at this. A simple way that traders use this strategy is simply if this stock price remains above this EMA, I'm going to hold my play. So I'm going to wait for my entry. Boom. This first 5 minute candle exploded. It is above all my EMAs. I'm going to buy my call here. I'll buy my call here. 691. And I'm going to hold, or sorry, I'm going to buy it here, 692, and hold this call for as long as SPY remains above the 9 EMA. You would have held 691.8 call all the way up to maybe right here, which is 693.4. So that just helped you get a SPY call for a $1.50 move. But let's say you want to use the 21 EMA. Now you're telling yourself, okay, I'm going to hold this call for as long as we stay above the 21 EMA. Well, in the 5 minute time frame, you're able to hold your call from the moment it breaks out, right? It breaks out here. You buy your call, and I'm going to hold on to that and believe the stock is going to keep going up. I'm going to ride the wave like a surfer because my indicators are telling me that the trend is still up. So now you have used the 21 EMA to help you hold your calls, your profits from 691.75 all the way up to 695, a whole $4 move in SPY. So think about the opportunities, think about the potential of using this tool for your own trading ideas, your trading plays. You're able to try to hypothetically see where your entries would be, where your exits would be. It's so fun. You want to if you want to start implementing this EMA and SMA tool, first thing that I recommend is to look at charts, see how the stock chart respects these levels, these EMAs and SMAs, and then see how you could use it to your advantage in the way that you want to invest. All right. So that right there is going to be episode 6. I hope you guys enjoyed that. That was a long one, but I think I went over 3 great examples. I hope you guys enjoyed it. Wow. That was that. That was the way to finish the series. If you finished the whole episode, or if you didn't, you're going to get what you wanted out of it, right? All right, we're gonna end it here. I hope you guys enjoyed the series. I can't wait to what the next part will be on the IC Trades YouTube channel. Before I log off here, I do want to say, um, these 6 episodes, the YouTube series, the Stock Market for Beginners series, will not be public. Will not be free to see forever. Very soon, I'm going to lock these videos up, lock these episodes, and make them private. Why are you making it private? Why? Because these episodes are gonna serve as the fundamentals course for all Discord members. They're gonna be exclusive for Discord members, and I want Discord members to get the best courses, the best learning tools, so that they could be IC trades level traders and stock market investors. So, with that being said, there's no reason to wait and not join the Discord. It's gonna be in my in the description. Comment down below if you need the link because the link expired. But you already know, IC Trades always got your back, and as always, stay icy, baby.